Too much. Dinshaw Irani is Chief Investment Officer at Helios Capital. He's joining us now to take some questions. Dinshaw, good to have you with us here. Thank you very much for your time. It's kind of been a very strong rally till about a week ago, and then a sideways market for the last week. And yesterday, once again, hopes came back that maybe we're resuming the rally upwards. The all-time high is not very far away, 4-5% of the Nifty, and similar numbers for the Bank Nifty as well. Do you see enough in the mix in terms of impulse triggers for the market to sort of move higher meaningfully from here?
So Prashant, thank you for having me on your show, and very good afternoon to you and your viewers. Now, look, if you look at the year-to-date performance of the market, it's not gone much, right? I mean, it's come off its peak and it's remained there. And in fact, that's what we've been calling out for a while, that probably you'll see the market trading in a very tight band of whatever, 17,500 to 18,000 and stuff, and which is happening, right? In fact, our feel is that this band will continue probably into this quarter itself. I mean, by June or something, because there's not much of excitement, frankly, happening out here. Even the rally that you saw yesterday was driven by banks, and frankly, I mean, that was because of the numbers brought out by ICICI Bank, blowout numbers, in fact. So that helped in a way. But our call is that the demand itself, domestic demand we're talking about here, is a bit constrained today. So the consumption-driven names and probably some commodity names and all these guys will not be reporting that kind of good numbers. You've already seen the external-facing sector getting pressurized. I mean, IT is a good example. I mean, the results were a washout, in fact, and shocker rather. Infosys in particular. So you've seen that, right? So there'll be a drag on the market. There'll be some pockets where the upsides will be there, like banking and all. Otherwise, we don't see the market getting too excited. And all this call will be obviously when Fed comes out with this further FOMC numbers in May itself. If they contain, I mean, if they do not take any interest rate hikes and RBI continues to do the same, then you may see some rally coming in the second half of this year. And that's what our feel is also, that if you're looking at the market moving up 8-9% in the whole year as such, normally it does 13-14%, you'll see the bulk of the rally coming only in the second half. And that all also will depend on, obviously, a healthy monsoon. If monsoons are normal, then that should help the rally. It should be going higher. But if there's El Nino, then probably the rally also will be constrained.
So earnings is not going to change the trajectory of the markets because you expect this consolidation to take place. So the biggest thesis for markets picking up in the second half of the year is that the Fed pauses after perhaps one more rate hike and then it pivots, right? That's the only driver for a pickup in market returns, according to you.
Yeah. So actually our feel is that if things go the way they are, probably from September onwards, you may start seeing a cut in interest rate cycles as such. And that should help the market, in fact, also to believe that things are now normalizing, per se. But as of now, it doesn't look like it because, I mean, ironically, the study was done in the US itself that once a tornado passes a town, the survivors come out very euphoric. But once the storm has passed, you start assessing the damages, and that's when your things come down. And I think that's where we are today. The storm has passed. We're fairly euphoric. Let's see how it goes going forward.
Good afternoon. Thanks so much for joining. And Dinshaw, we spoke early April, I think so. And post that, we got some pretty weak commentary, weak results coming in from the IT pack. It makes you all interested or not yet?
Not as yet, Nigel, because our feel is that, in fact, June quarter will be the real quarter when things will further weaken out for them. You saw the numbers, right? I mean, in fact, if I remember right, Infosys for the December numbers, they on 17 Jan, if I remember the date right, they had upped the guidance, and it was the 45 days after that when things really collapsed for them. So you can imagine that things have worsened going into the March numbers per se, and obviously nothing positive has come out after that also. So the triggers are not there in place. And obviously, this particular June quarter will be probably the worst for IT names. Also, going forward, I mean, you can see that in the markets, right? I mean, things are not looking that bright in the US. There's a recession around the corner, which is a given, and that's what the Fed also needs as such. So all these things will work not in favor of IT companies, or in fact, any dollar earner as such and rupee spender. So that's our call. Yeah, so it's better to stay away. And also the valuations haven't fallen in line. They're still, I mean, even if you consider say high single digits, which the market is considering today. I mean, if you look at the analyst numbers, the valuations are still some 10-15% away from pre-COVID levels. But our call is that these will come off. The growth guidance will come off. It will be in mid-single digits. And that's when you'll see the valuations also, the premiums moving up because of the guidance is being cut. So that has to correct for us to get excited.
Dinshaw, hi, afternoon, Surabhi here. So I remember we were discussing this last time when you were here. We were talking about financials, and I remember you making the point that you would rather add incremental money to banks than non-banks. And since then, I mean, we've got absolutely blowout performance from ICICI Bank, for instance. I mean, Q4 really tells us what's happening over there, right? So spot on. So tell me, incrementally, I mean, are you shifting anything in the portfolio, adding fresh more to banks? I get, but for instance, Bajaj Finance has been an old holding for Helios. I'm not sure if you've already been paring down positions there or not. Bajaj Finance reports tomorrow, because let's face it, this sector, retail consumer financing, it's all set for some pretty big disruption ahead.
Totally wrong, Surabhi. We've never had Bajaj Finance in a very long time. In fact,
my bad. I don't know why I thought that you had it in the portfolio.
We have it on the short side, in the long short.
On the short side, okay. My bad. Interesting. Okay, then it all ties in. Now it makes a proper sense. So, same question, financials, given what we're seeing from these top leaders and lenders, how are you approaching this part of the portfolio? So
basically, Surabhi, in fact, our feel is that the call was what? The banks were getting earlier hammered because everybody assumed that the NIMs are gonna peak out. Obviously, the interest rates had gone up quite sharply, and the deposits were catching up with the interest rates. The deposit rates, rather, were catching up with the interest rates, and as a result, the cost of borrowings will move up for the banks, and as a result, the NIMs would peak, right? Net interest margins, that is. Now, our call was that maybe they will, but the fact was that the growth in credit is the one which is going to push the earnings going forward. And that's a very big positive for the banks, because they're not only working on this technical aspect of the NIMs expanding, but also growth kicking in as such. And that is a big positive for re-rating of banks. And that's why we believe that this is a matter of time before the banks start reporting these huge credit growth numbers. And obviously, when the economy is picking up, it's a matter of time before that. And by the way, the base also was helping out here. So that's the thing here. In case of NBFCs, we're not that gung-ho, because if your NIMs are getting stretched there, there's a matter of time before the asset quality starts getting questioned as such. And that's why we're away from most of the NBFCs. We got a couple of them in our portfolio, but that also has to do with the only CV funding and stuff, and housing mortgage and stuff like that. So that's where we are.
All right, Dinshaw, very quickly, you want to share with us some more ideas you have on the short side? Normally, because the buy calls, it's a little difficult to get out. If you could share a couple of those on the short side.
All high valuation names like the paints companies, they are a short in our portfolio. A couple of steel names are a short in our portfolio and stuff like that. But apart from that, yeah, I won't share too much.
Okay, all right, Dinshaw. Thanks so much for giving us some color on what you could. We look forward to having a chat with you.